How to pay off your loan fast without making more money. Do you have a loan that just feels like it will never go away? Are you tired of making payments month after month and barely seeing a difference in your balance? You are not alone. Millions of people are in the same situation, but the good news is you can pay off your loan faster without getting a raise or picking up a second job. That is right, even if your income stays exactly the same, there are smart ways to cut down your debt faster. You do not need a higher income to escape debt faster. In this video, I'm going to walk you through a complete plan to pay off your loan faster, even if your income stays exactly the same. You will learn how to cut years off your loan, how to reduce interest, and how to stay motivated until the end. Watch until the very last tip, because that one is often overlooked, and it could save you thousands. Step 1: Know your number before you do anything else. You need to sit down and understand exactly what you owe. Too many people ignore this step and just make their monthly payments without really understanding the details. Find out the total amount you owe, what your interest rate is, what your minimum monthly payment is, and how long you have left on the loan. Write it all down or use a simple spreadsheet. This gives you a clear picture of where you stand and helps you track your progress. Understanding the math behind your loan can be motivating. It turns a huge, overwhelming number into something you can break down and tackle. Because most people avoid looking at the details, they just keep paying automatically and hope it goes away someday. But when you know your numbers, you can start making real decisions. You can see exactly how much extra to pay to shave off time. You can see how much interest you are losing too. And you can make real progress you can measure. This is one of the most underrated tricks out there. Instead of making one monthly payment, split it in half and pay every 2 weeks. Split it into $300 every 2 weeks. Here is why this works so well. There are 12 months in a year, but there are 52 weeks, so if you pay every 2 weeks, you end up making 26 half payments. That adds up to 13 full payments per year, instead of 12. That extra payment might not sound like much, but over 5 to 10 years it can knock off months from your loan term and save you hundreds or even thousands in interest, all without spending a single extra dollar monthly. There are 12 months in a year, but there are 52 weeks. So if you pay every 2 weeks, you end up making 26 half payments. This step is small but powerful. Start rounding up every loan payment. If your payment is $217, round it up to $230. If it is $482, make it $500. That small extra goes directly to the loan principal. That means less interest and faster payoff. The best part is, you will barely feel the difference in your budget. But over the life of the loan, you can save hundreds or even thousands. Let us say you round up $20 a month, that is $240 a year. If your loan lasts 5 years, that is $1,200 of extra progress without any lifestyle change. When you get unexpected money like a tax refund, a birthday gift, or even a small bonus at work, use it to crush your loan. Most people use these windfalls to treat themselves. A new gadget, a weekend getaway, a fancy dinner, cash from selling something online. The average tax refund is over $2,500. If you use that as an extra loan payment instead of spending it, you instantly make a dent in your loan. Every time you get extra money, you have 2 options: spend it today or buy your freedom faster. Paying off a loan is buying freedom from stress. Use the money to make a lump sum payment on your loan. Why? Because these payments go directly to the principal. That means you lower the total amount you owe and reduce future interest. A few $100s once or twice a year can knock off thousands over time. You do not have to change your whole lifestyle. Just pick one non-essential item you spend money on regularly. Here are a few ideas: cancel a streaming service, skip takeout once a week, use your current phone for 1 more year. Use your current phone for 1 more year. Let us say you free up $50 a month, that is $600 a year, put that money toward your loan instead. Let us say you free up $50 a month. Put that money toward your loan instead. That might not sound like a lot, but over 3 years, that is $1,800. And again, that money goes directly to the principal, reducing interest as well. Debt is not just a numbers game, it is a behavior game. Smart money choices compound over time. If your interest rate is high, you are giving away money. Many people do not realize they can refinance their loan, or simply call their lender and ask for better terms. Here is how to approach it. First, improve your credit if you can. Then, shop around for new lenders or refinance offers. Sometimes, credit unions offer much lower rates. If you have a high interest rate you are paying way more than, calling your bank or lender could save you thousands. Ask if you can refinance or negotiate a lower interest rate. If you have made consistent payments and improved your credit, there is a good chance they will work with you. Even a 1% drop in your interest rate can make a big difference over time. You can also shop around for better rates at credit unions or online lenders. The less you pay in interest, the more of your payment goes toward the loan itself. If you have been paying on time for 12 months or more, many lenders will lower your rate just to keep your business. Even lowering your rate by 1% can shave thousands off your total repayment. This is especially powerful for student loans, car loans, or personal loans. If you have multiple loans, it can feel overwhelming. The best strategy is to focus all your extra payments on one loan, and make minimum payments on the rest. There are two methods. The snowball method means paying off the smallest balance first. It gives you a quick win and builds motivation. It saves the most money in the long run. The avalanche method means paying off the highest interest rate loan first. Both work, the key is to pick one and stick with it. This creates a debt-crushing snowball. When you pay off one loan, roll that freed up payment into the next one. Focus on one loan at a time. If you have multiple loans, it can feel like you are getting nowhere fast. The best approach is to focus all your extra payments on one loan while making minimum payments on the rest. Put a reminder in your calendar every 3 months to check progress. Automate your plan. Once you pick your strategy, set it and forget it. Automate your extra payment schedule. Your biweekly payments create automatic transfers to your loan on payday. When you automate your plan, you remove temptation and stay consistent. Consistency is what wins the race. Consistency wins, even slow progress, if automatic, beats fast progress that never happens. You do not need to earn more money to pay off your loan faster, you just need to be more intentional with the money you already have. So let us recap. You do not need a higher income to pay off your loan faster, you just need the right plan. Know your numbers. Switch to biweekly payments. Round up your payments. Use windfalls. Cut and redirect your spending. Refinance when you can. Focus on one loan at a time and automate the whole process. You can do this. With these steps you can get rid of your loan years earlier than planned and save thousands in interest. You have the power to take control of your debt, and every smart step you take brings you closer to financial freedom. If you found this video helpful, click the like button. It tells the algorithm to share this with more people like you. Subscribe to the channel for more practical money tips that actually make a difference. Tell us what loan you're working on and which tip you will try first. We are here to help you win with your money, and leave a comment below. Thanks for watching, and I will see you in the next video.